Okay, in this lecture, we are going to talk about volumes, liquidity, and behind the scenes of trading. So, what exactly are we going to cover? We will see what volume is not and what volume is, and what actually is the right perspective about volume. And we'll talk something about volume nodes. Then we will discuss one of the most important factor, which is what is liquidity, how to use and categorize stocks about liquidity. Then we'll talk about liquidity in buying, selling stocks, which will lead us to the third topic, behind the scenes of trading, which is all about position size, your stop loss, targets, from a perspective of liquidity. Okay. And this may actually help you open your eyes and enlighten you about a lot of people and traps on the social media that we are going to discuss. So, a really interesting one. All right, let's get started. So, the first thing, let's talk about volumes. Now, I've seen a lot of people, they will say, you see over here, there is a green bar reflecting the volume. So they will say a lot of buying volume, right? The point is, that's not the case. Volume is not you're buying or selling more, right? Volume is simply shares that are traded on a given candle in a given time period. So let's say this time period that we see is of a daily time frame time period. And if every single candle is a daily candle, it simply tells you how many stocks exchanged hands, which means buying will always be selling, equal to the selling, always. Okay. So let's say over here, 10 million stocks, that is the volume that is coming on this. So it means 10 million stocks were bought and 10 million stocks were sold. Simple equation. And you will see in a lot of books, uh, even on social media, obviously, that people use words like institutions buying, smart money, entering accumulation, big money is coming, operators. Honestly, this is all crap. And these are just names that are given to give some context or maybe some meaning to something which is absolutely not necessary for you. It's it is simply unnecessary bias that has been created in people's mind. Okay. So please be aware of this and please refrain from using all these things because it kind of sets a wrong perspective about the price itself. And we will see what exactly is important. So that is price zones along with candlesticks. They give some kind of bullish or bearish, if you like to use those words. They help you give some context, right? They give you the context of buying or selling to it. Because on its own, volumes simply have no relevance in deciding the bias of going long or short. Okay. They simply help you establish liquidity at price point. Now, what exactly is this? Let me explain this to you. So, imagine that there is a stock which, goes up like this and starts contracting. And, according to your setup, your work, you feel this is a great buying point. And when you also see the volume of that, the associated volume with those things, what you see is, when the price is going up, the volumes are really great. Okay, so the volumes start like this, gradually getting better and better with the move, right? This is how the volumes look. All right. And then what happens is, let's take a scenario that you get something like this as well. Okay. And the candles that you're getting over here is, let's say, something like this. So let's draw the candles as well. So this is how you get the up move. And also, the candlesticks are absolutely brilliant and necessary. There is a lot of debate people actually do about bars chart and all that. Anyways, that's not even something debatable, but just letting you know. Please start using candlesticks. Extremely important when you actually understand them. So let's say this is how the candles are appearing, getting just better and better. And then you get something like this over here. Okay. A candle like this. All right. Now, what does this tell me? So the price went up, the volumes were going up. Pretty good. And if I draw the average volume line also over here, let's say that look like this, okay? So you will see there is a lot of volume that has come above the average. There is a lot, right? Now, some people will say there was a lot of buying, then there was a lot of selling. That's not the point. You have to see that, well, at this point, right? And in this entire zone, right? Which is basically what volume profile. We'll not talk about that in this video, maybe someday later. But all you need to know is somewhere here, there's a lot of liquidity action that has happened, right? Let's assume this is a daily time frame. And let's say now we start contracting. And if you decide to buy here, what you have to see is there was a lot of volume activity that has happened over here. And then what is also important is how did that happen? What kind of candle was associated over there, right? And well, this is certainly not a candle that is really great. Now, just imagine after this, you get candles like this, small body candles, um, candles over here in general about the contraction. If that's what you're getting, and this happens to be a really big one, then that gives you some context that, okay, there was a lot of selling pressure coming from this zone. Okay. There was a lot of volatility coming on the downside. So now if I decide to buy over here, well, I have to be aware if the prices climb up, this will be a zone where there will be a lot of liquidation activity. How that happens, what happens, that's something to be seen, but I have to keep that point in mind. Now, just imagine what actually happens if this is the first case, all right, and I take a second case as well here, in which what actually happened, well, this was looking something like this, and well, this candle was not as bad, okay, or maybe it can be a small inside candle as well, right? Now, the volume drastically reduced when it felt like the selling pressure was more. Now, this will give you some more bias. Okay, at this point of time, there might be more bias from the buying pressure and not as much from the selling perspective. Right? Why? The volumes have drastically reduced when the prices were actually going down. That is something you have to always see. So, you see, volumes along with the context the candlesticks are setting for you, they help you give an idea of what things can happen. And I'll show it to you on a chart as well. All right, now look at this chart. Look at this candle. Look at this candle. Look how are the volumes, right? A lot of volume activity is happening over here, correct? But what is the context? Where is the price? And you will actually see it is a price level of previous pivot zone, right? Okay, so that's one interesting point about this. So was it actually selling or was it actually buying? Gives you a bit of context, right? Using that knowledge. But now focus here. This is the important zone of focus. Look at the volume. Pretty good candle as well. Then look what happened. Literally feels like just the reverse scenario of this candle, right? But look at the volumes associated now. Drastically reduced. All right. And then again, there is a pretty good candle comes up. Volumes are almost similar. Okay. Right. So the highest volume came here, but after that, less than average. So this is one instance. Okay. Now come on the right side here. Now look at this guy. Look at this candle. Look at this candle. Looks a bit similar. True. And they both have pretty good volumes. Right. So what this becomes? This becomes an important zone of volume activity. Right. That can bring in a lot of volatility as well. Right. Look what happened over here. Exactly in this zone. I'll give you actually more context or it'll be more clear to you. Now look at this. I mean, just look at the volume activity going around over here. Yeah. And look at the candle associated. Look at the context, what has happened on the left hand side. See? And then what happens? When you actually come back again in that zone, look, you had similar kind of reaction around this zone from a perspective of volumes as well. Like literally all candles, right from here till this point, you're having so much liquidity going on over here. Hmm? Which is exactly the same case, which has happened earlier as well. Now, just imagine if this was not present with this amount of volumes. Maybe we just have less volumes, we could have gotten a really better get through from here, right? And that's exactly what actually happened at this point. We will mark from a daily and then we'll analyze that zone as well. And you'll see it happening over and over and again, right? So let's go on to the hourly about this and have a look. Volume comes in a lot over here and post that look, drastic reduce, right? Then we again go into that zone, volumes come in and post that what happens. See how smoothly you just went through that. Yeah. Kind of establishing a new zone. You see, these are the volumes that are coming through here now. So that's something really interesting. And also take a note. We went into this area of great volumes were coming when you're going up. Then you kind of go sideways here, right? And I see a minus 8% candle with a lot of volumes. Interesting. What does this tell me? Well, this is a zone that kind of triggered a lot of selling pressure coming in, right? This is called as a lot of selling pressure. Okay. And just go and see what happened on the right hand side. We are exactly in that zone. True. From where the same volatility is coming through on the downside. A lot of selling pressure is coming on the downside, exactly from this zone. So that's a great takeaway. That's how you read the volumes along with the candlesticks and base your expectations. Now, if we did not have all this, we probably would have gotten much better, in a much better fashion from this point onwards. But let's see what happens. But this is what volume nodes is, and this is the right interpretation about the candles and volumes associated. All right. So I hope this gives you some good idea about how to use the volumes. Now let's move on to the more important part, which is actually liquidity. Right? Insanely important. So see, volumes help in judging the liquidity aspect of a stock, and they enable you to categorize the stock on the basis of their liquidity. And I'll tell you, it's unfortunate that people actually don't have an idea about the volumes. And as a consequence, there are a lot of unnecessary, irrelevant indicators present about the volumes. And honestly, you'll see them a lot, especially on Twitter and YouTube. Something called as R wall. I've seen a lot of people use this. HVE, HVQ, HVY. Then some people have also, you probably would have seen that green market float, market cap, average turnover, bullcrap. Now you will say, oh, but how can you say that, right? Uh, why are you saying that? Hmm? I'll explain all of this with a lot of proofs to you in probably a couple of videos. There is something really exciting for you to see there, which I'll show it to you. But for now, just take it that honestly, just bullcrap, and I'll explain that to you. So the volumes are actually for liquidity and some context as to liquidity zones with regard to price action, which we have seen. Any other interpretation, I'm sorry, that's just crap and noise. Some people say relative volume have already come in the first hour of the day. Something must be happening. I mean, what are you even making up? Come on. And because of all this, people actually miss the point, the simple basics, and they actually get lost in too much technical jargon and intellectual discussions just to sound, I don't know, get some kind of a position of authority. I don't get about that. Now, I'll tell you. So, this point, categorization on the basis of liquidity. Now, understand this. Let's say there is a stock, you know, where the average turnover for the past, let's say, 20 or 30 days has just been 3 or 4 crores. Okay. And then there is a stock where the average turnover for the past 20 to 30 days has been, let's say, 50 to 60 crores. Where is a lot of money? There's a lot of money. Now, the people who actually use these words called as institutions, big money, and all that, chalo, theek hai. You want to use those? All right. Where would they be? If actually big money is there, institutions are there, where would they'll be in 3 fours or they'll be in 50 and 60? It's 50 and 60, obviously, because probably there are institutions, there are big money, there is smart money, right? Who's accumulating a lot. So the average turnover will be more. Okay, fine. That is interpretation and categorization. But what is even more important is actually behind the scenes of trading. And now let me show you a few volume profiles here on your screen. Okay. Pay attention to these numbers. This is called as average turnover for the past 20 days, average turnover for the past 3 days, and then there's this trading logo coming here, trading view logo, but it is actually the latest turnover, right? On the latest candle. So basically, this volume bar that we have here, or this one. Okay. That is what we are seeing. And these are volume profiles. Now have a look in these two volume profiles. Pretty similar, right? And really amazing to see this happening. Okay. Now, what you actually see over here is the average turnover for this time period is coming around 314 crore, which is actually a lot, right? For this stock, the average turnover for this period is coming around 6.12 crores. Okay, fine. And what you see is these volumes, the latest turnover, basically the turnover on this day is somewhere around 80 to 100 crores. Okay, when the volumes are extremely less. For these days, it is somewhere around 50 to 60 crores. But for this stock, when the volumes are actually really less, when people say volumes are drying up, the average turnover on these days is literally 4.28 crores. Do you see this? If I don't understand this information, if I don't use it, I will actually mistake these two to be similar. And what will happen is, let's say I wish to put, let's say, 3 crores, 2 crores in a stock, right? And I'm like, oh, high volumes. Now the contraction is happening on very less volumes. Let me go and put 2, 3 crores. So you're putting 3 crores in a stock where literally the turnover is coming around 4 or 3 crores. You know what will happen in that case? Exactly. So do you see this? What actually looks very similar might be entirely different from the inside. And what is also important to notice is when the volumes actually came a lot, at this point, the average turnover for this stock, at this point was coming around somewhere 60 crores or so because of these these volume bars, right? But if you actually see the latest turnover on this day, it was single digit. But with this stock, this turnover, you know, it was the latest turnover of this day was actually 50, 60 crores, which means even on these days, you can actually buy a lot, even on these days. That is called as liquidity and liquid stocks. And this gives you the illusion of being liquid or smart money or whatever, but actually they're pretty illiquid, especially when buying during contractions. And this now leads me to popular methods that people actually use to buy stocks or stop losses. So people on the social media, on Twitter will show you, let's say there was a stock which goes up, contracts, and then you actually get inside bar, let's say you get a candle like this, all right? And within that, you have an inside bar, okay? So people will call inside bar setup, whatever name they want to give it. And what they will show you is they bought above the high of this bar, right? With their SL below the low of this day, or maybe some arbitrary number like a 2%. And then they will show you that, see, the stock next day gave a very good big green candle, which will appear as 12%. And they'll show it to you that I bought it here with my SL here. And this is the stock. So on the face of it, you will feel, wow, man, what an entry, 12% profits. That's really great. But now let me show something to you. Let's say we take the volume profile number 2 for this case, okay? Mind you, the liquidity is extremely less. Even if you try to buy stock worth of maybe 10 lakh or 20 lakh, it will be with some slippage. So forget about going into 50 plus or 5 crores plus. That's not the point. We are just all talking about 10 lakhs or 20 lakhs position size. That is going to be difficult. But now what you're doing is you're actually buying during momentum in a stock that is actually illiquid. So on the social media, on Twitter, I can certainly post a Twitter and you'll feel like, wow, man, his trades are so clean. But they actually do not translate into so much money. Why? I'll show. So let's say your desired buy point was 100, okay? Your desired SL was, let's say, 98 over here. But since you're dealing with volume profile number 2, which is actually illiquid, what's going to happen? You place your buy order at 100, market order or whatever, or maybe limit order. If you actually put 100 limit order, or if you place GTT, what's going to happen is, let's take scenarios. Let's say you place the market order, okay, at 100 when the price was crossing. You will realize even with smaller position sizes, you will not get 100. You will probably get 101.6, maybe 102.3, or numbers around like that. Now, do you see what a problem this has created for you? Because the calculation of the SL that you did was on the basis of 198. It was never considering this, because you don't know how much slippage you're going to actually face if you don't have an idea about the liquidity. So now this sends your Excel done R calculation, stop loss calculation, percentages on all those. It makes them not really effective as much they were on the paper. Okay. Now consider it is going up and then the stock decides to maybe reverse. Okay, starts coming down. Now what's going to happen is, probably you can show on the Twitter that I actually sold her. But again, when the buying was difficult, and especially when these stocks come down, you decided, let's say your plan was maybe to sell at 114. Okay. But when you actually place the market sell order, you will see the execution as 112.3, 111.6 or something like that, which is losing a lot of percentages. So on the screen, what actually looks really great, but it's no more now, right? So on the Excels and all, if you do the calculation on based on that, if you're doing trading, it's going to be really difficult. So this was market order. Now let's take a scenario of limit order, right? You're like, well, we don't take slippages here. You place a limit order of, let's say, 101, okay, around the crossing of 100. What happens? You probably get partial quantity. You wanted to buy 100, you only got 30. And do you see what problem this has created? Maybe this was actually a really good 5-on-5 setup, but on a 5-on-5 setup, you did not get the quantity filled. It's again sending your risk reward calculation in the bin. And maybe you traded some 2:5 and got entire quantity filled, and on that you had your SL. What's going to happen? You will probably not get it. And this is from a perspective when the trade is actually working. Now just imagine you get in the stock, but it doesn't do that. Rather, what actually happens is, let's say we do get a candle like this, right? And maybe the very next day, what actually happens is this probably your SL, is it? Now again, according to your calculations, 98 is your out price. What happens? Again, you use market order. You'll probably have to use a market order, because what if you don't get the fill in the limit order? Now, when you're doing that, certainly it will not be 98. You'll probably end up giving 96.8, 97.3. And these small numbers, fine, you probably can ignore it. But over the long term, it really deteriorates whatever calculation you do on the Excel. So what Excel shows you that you should be plus 30R or 50R, in real, you're probably just plus 12R or 18R. So a lot of divergence actually happens. So I don't know how many people actually understand it. But when you do the same things, probably with the case number 1, yes, there will still be slippages over here, but very less. Correct? So it's extremely crucial that what kind of entry methods, exit methods you can use with what kind of stocks. But if you don't have this information with you, it's going to be really difficult, because if I just see this, well, they probably look pretty similar to me, right? But from the inside, they're actually very different. And that's exactly what I wanted to give you. So you want to prefer case number 1, right? Volumes are really great when the prices are doing good. And even when the volumes are extremely less, the average liquidity is still in the stock. Because with the case 2, even my biggest problem and fear why I do not take the trade over here is I have a habit of going really big. And the problem with this is, let's say I accumulate everything, but what if I get a counter move? Because in that case, it will be extremely difficult for me to take an exit at the price that I want. So I cannot be dependent on those Excel based calculations. I have to see from a realistic point of view. That's extremely crucial. And then you'll also see this kind of volume profile. You see almost all the volume candles that you see over here are actually literally average. And this is just all right. You want to prefer case number one. This is a case which is, you see average volumes coming throughout, not the best. Because there's a lot of trading, lot of activity happening literally every single day. And usually such kind of volume profiles are associated with the stocks that are just average looking, pretty volatile, right? Pretty choppy, if you may allow. So, these are the three important volume profiles. This is actually behind the scenes of trading, which you will not see on the Twitter or on the social media. Uh, but yeah, please be very aware. A lot of people are doing this. They post pretty charts, but behind that, the money that is being made is pretty much less. Most of the people are underperforming. And that's exactly why I say people that your entry in the zones has to be really good at a really good price. Extremely important. Yeah, this is about the volumes in great detail, and I'm probably thinking to give you this indicator probably in a part two of this video. But please be aware, please understand all this thing, and try to experience this yourself. Like, try doing it once. Whatever the loss will be, that's okay. Try doing all of this once. The day you realize it, and try to also see this data from your account and try to match it with the Excel calculation, which takes the assumption that you're going to be extremely efficient with your buys and sells, and you will actually see this difference in your account, because that's simply the way markets work. So if somebody is showing you like this on the Excel's extensive calculations, uh well, I hope you're smart enough to understand. But anyways, a pretty good lecture this is about the volumes, and I hope you take the necessary learnings from here. And I hope I see you very soon with the part two of this, wherein we will talk about this indicator.